Good morning, everyone, and welcome to the Quantum Leap Morning Leap. This is our trade plan setup pre-market for Tuesday, February the 2nd, 2016. My name is Doug Kay. I am the founder and the head moderator for Quantum Leap. This is a subscription service. We do these live sessions each morning and then do live trading and analysis during the course of the day. If you're interested in coming in and checking us out, I'll put my contact information up in just 1 second. Before I do that, though, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own trade metrics. Okay, if you do want to get a hold of me, just send me an email to quantumleapfutures@gmail.com. Unfortunately, this is not a commercial venture. There's no website, there's no blog, there's just us live each day. You can also give me a call, 647-545-8065. Love to talk about the markets. If you've got any questions, please don't hesitate to call me. Plus, you will need a Skype account. We do our live chat using a Skype room. So you'll need a Skype account. It's easy to do. It takes about 10 seconds to open up. Send me a contact request to Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Of course, there's over 300 of these days, these pre-market videos on YouTube. Simply just do a search for Quantum Leap Futures or Quantum Leap Trading, and you can check out our past performance. If you like what I do, please follow me on Twitter @Crazy2. Okay, so first things first. Yesterday we were looking for a rotational day, and we were basically anticipating a rotation between the 1909.75 area and the 1932.25, with possibly a poke down into that lower range towards the 1885, 1890 area. We did think it would be rotational, and we had a key line in the sand above us at the 1832.50 area, that key CLVN. We said if we popped up there, we'd likely go and test the other side of that at the 41 and targeting 39, when we targeted 35 as our main target above range and above value, with 39 and then possibly getting some resistance at 41. We popped up, got a resistance at 41. By the way, beautiful Mr. Sneaky setup on that move down off of the rejection of that key area. But basically, our main hypothesis did play out most of the day, where we just churned around, repaired the auction from the trend day, and had a little bit of a late probe in the afternoon, and we ended up closing at 1930.50, not too far away from where we closed on Friday. So very much a rotational day. Taking a quick look at the news. We have 10 a.m. we have IBD tip economic optimism. Of course, we've got total vehicle sales coming out all day today. FOMC member George speaks at 1 o'clock, and then really nothing in terms of any major news there. Just taking a quick look at the earnings. And we are continuing to see our earnings season. There was 75 before the open today, 74 after. Looks like most of them again were meet or beat, but again, as Marvin keeps pointing out to us, that a lot of them are shifting the guidance down. I guess Google news last night was not bad either. So just pay attention that we are in earnings seasons, and earnings can drive this market. And for the most part, most of the earnings are meet or beat, but we do have some future guidance downgrades expected coming into the market. So each morning I like to start my day with a simple chart. It's a a practice I've gotten into and I've been doing for years. And basically I use a candlestick chart with a 9 EMA and a 20 SMA. I just want to get a feel for where we are within the time frames, how, what the strength of the trend is, and I start with a monthly and I move my way down. So you can see we've had this beautiful trend up for several years. We first started challenging it and violating it in August and September. November and December they took it back, and then October and November took it back, and then December challenged it, but didn't quite break below, and then January we fell out of bed. We do have a FUBAR, Mr. Sneaky, possibly. It's still just the beginning of this month, but we could have an inside month and possible rotation to close this technical gap that we've got. Remember, we've got that 4-hour inverted head and shoulder that is still valid until we get below 1851.25, and that measured move target is still up into the 1960 area. Going over to the weekly, you can see that weekly we do have the start of a downward trend. We've got slope and separation. We created this technical gap we were talking about a couple weeks ago, and we're coming up to fill this technical gap. The technical gap will bring us into the 1950 area. There is a naked cross up here at 2009 area, so that's unrepaired auction up here, and we're likely to move up there. But remember, always keep in mind that this is what time frame this is on. This is on a weekly time frame. It could be weeks and weeks and weeks before we get back up into this to take out this naked cross, but it will happen. But the overall trend right now on the weekly is to the downside. On the daily, same thing. We've had this strong trend down. Now we're getting a consolidation pattern. We're actually getting that setting up for a possible cup and handle here on the daily. I'll have to take a look at that a little bit later. Let me just get rid of this. But we have challenged and violated the downward trend. We're coming into an MA squeeze here. We're probably going to get a cross here at some point in time, 9 crossing over the 20. But so far, we've violated this downward trend, and we're going into sideways consolidation on the daily. Going into the intraday, just want to point out again, this is the inverted head and shoulder pattern. There's the left shoulder, there's the head, there's the right shoulder. The neckline was right in that 1902, 1903 area, and the measured move takes us up into the 1963 area for the 61.8, and then all the way into the 2002, I believe it was, on the 100%. I always target the 61.8 as my main target and use the 100% as an extended target. And that is not violated until we come down here and take out this 1951.25. So far you can see we've had this upward trend in the 4-hour, but they are challenging it right now, coming down and testing the 20 SMA. We're probably going to get an MA squeeze here as we move forward into the RTH session. But the overall trend is being challenged but not violated. As we move down, we're probably going to see that that's not such the case in the smaller time frames. We do have this downward trend. They keep coming up and testing the 20 and failing off the 20. So the trend coming into the RTH session on the 30-minute is to the downside. And there's no real naked crosses until we get into the 1895, 1896 area. So just we've done a lot of repair work above. Now we're probably going to come down and do some repair work below. Going into the 15-minute, you can see the same thing, but we are losing separation here. So the trend is weakening to the downside. They've challenged it, but we're getting some continuation. And then on the 5-minute, you can see that it is accelerating. We're getting slope and separation. If we do not hold that 1909 area, then I'm looking for a test into the 1903.50 and possibly back into that 1890. So let's take a look at the big picture on the composite. So we were up here and we'd come down after falling out of this balance up here. We tried to hold here in the 2000s and we couldn't, and then we gapped down, and then we created this balance area back down at a prior microcomposite VPOC down here at 1915 area, and we tried to hold here. The last price that we tried to hold was down here at 1887. We couldn't, and then we fell out of balance, came down, came back to the former microcomposite, that target down at 1811 and a quarter that we were looking at, found the buyers, rotated back up, accepted value here at 65 and a quarter, worked our way up, came back up into this area right here around the 1886.75, and then we accepted price and value at 1890. Just before we broke out of balance, the last most accepted price was 1885 and a quarter. We popped up, broke out of that balance, come up to the 1915 area again, accept that, move higher. Now in the last 2 days we've tried to hold value up here at 1930, but we've fallen back and we've come back into the 1815. So right now we're trading at 1275. We're in this distribution right here. As I mentioned yesterday, there's a lot of undetermined fair value between 33 and 975. You've got the 1175, 15, 20, 24, and of course the key number, which is right around that 15, 16 area. And then below it, we've got the same undetermined fair value in this distribution zone right here, all the way down into the 8150 area. So the key line in the sand today for us is going to be this 1909.75 below. If we get below that, same hypothesis that we had yesterday. If we get below the 1909.75, looking for rotational day to come down and auction out Friday's lower distribution, with the main target being 1905.75 with the 03.75 just below it. Below 03.75, then I think we're going to come back and test this 1898 area, the value area high of the balance around that 1890. And if we get inside of it and we don't bounce there, then a trip back down into this distribution zone and back into the 1890 and 1885 is likely to happen. I think we're probably going to dip down today and test into the lower 1900s, below that 1909.75. It'll be critical whether or not we hold this 98 level, and we could bounce off of there and then start a rally up. If we hold 1909.75, then I'm looking for chop and rotational day in this area and a small grind back through the value area of yesterday, and further auctioning out and maturing the price acceptance in this undetermined fair value area, possibly even coming back up into the 30 and possibly closing the gap. We do have the range to do it. So nothing's out, nothing's off the table right now. We've got range to go down into the 85, and we've got range to go and continue our price discovery higher. But I am anticipating more of a rotational day again. I don't think we'll get a continuation day. We tried to get the continuation day yesterday, and they clearly had the sellers stepping in and taking us back down overnight. All the way down to test the 9 level overnight. So let's take a look at the overnight session, and then we'll start moving our numbers over, setting up our levels. So our overnight high is 32. Our overnight low is the, so far, I should say so far, because we do have time to go down and put a new low in, and they've been doing that, either putting a new high or new low in just as the RTH session opens, and that's at sorry, was it 9.25? 9.25. And then our overnight VPOC inventory is net short overnight 16, right at our CPR, change percentage of range price. And then there's an LVN up here at the 21.75, which is just above this 2050 value area low. So a key trade area is going to be between this 2050 and above the 21.75. So if you want to get long, you want to be long above the 21.75, not above the 2050. You're going to get short off of here. You want to be below the 2050, not into it. So just don't get caught in this little rejection range. Let's do the levels to the upside first. If we get above the 21.75, the first target that I'm going to use is going to be this 24. Of course, we've got the VWAP here at 25. Remember, we did that. I set that breakout trade yesterday afternoon on that cup and handle, and we said that the breakout trade was going to be above that 25.50. The value area or the VWAP is at 25.50, so I'm going to use that as a continuation area. So if we get above the 22 and into the 24 and we come up at 25, I'll be looking for the possibility of rejection off of the VWAP and this key area. But if we get through it, I'll be looking for continuation with the first target at the floor pivot at 27. Of course, we've got the month open at 29.75. Once we're in this area, I'm really not going to be trying to enter a trade. I want to just wait for the continuation up into the gap close and into the VPOC. They stole the VPOC into the close from this 21 area in the last bar of the trade session. So if we get inside a value and above the 25.50, I'm looking for continuation and a move to take out the gap, take out the month open and the naked VPOC and the overnight high, especially if we leave the overnight low. Remember, 96% probability taking out the overnight high or overnight low. We have to anticipate that it's going to be the overnight low just from where we're trading and the weakness we're seeing. But if they leave this overnight low alone and get back into value, then I'd be looking for an 80% destination trade and continuation through here. So I won't be trying to short in this area above the 25.50. And the targets will be 27, 29.75, 30.50, the gap close, and the VPOC, and then the 31. The first area that I'll be looking for rejection, and I don't need this anymore. Let me just bring this down here. The first area that I'll be looking for rejection is right here in around the 33 area. So just above the overnight high. Of course, if we don't reject there and we get through it, then I'd say our 80% destination trade, because we likely have spent 2 TPO counts inside of the value area by that time. That gives us an 80% probability of going and testing the value area high and a trip through value all the way up into the 39. Above the 33, same target as we had yesterday at the 35.25. And then, of course, target and possible trade area at 39. 41, the CLVN, just above our range high, is going to be our key line in the sand above. Above, all our targets don't change. 47.25. There's a little bit of resistance. I'm going to bring this 53 down to 49.50. And then above 49.50, we've got 52.25 and 57.75. which is basically right near our daily upside target. And then, of course, anything above there, we're looking for a bigger move up into the 60s. Remember that that 62, 63 area is the measured move. I'm going to put it at 62 just to be conservative. So just got to keep that in mind if we get there. I don't think we're going to get there today. Again, I think we're going to see rotation. I think we're going to see rotation back down below the 09 area. If you want to be aggressive in this area, you can use the 1250 as a trade area. If we get back inside of the range from yesterday, we're likely to come up into our first target, which will be the overnight VPOC, and possibly continuation up into yesterday's open and the value area. If we come down, look for responsive buying down here in the 1908 area. But if we break that 1908 area, I would be targeting the I would be targeting the 0575. Oh, I moved that. 0575. And then remember, our return to the scene of the crime for the FOMC number is here at 1904. And then just below it, we have that 0375 as a possible bounce area. Below 0375, forget 1900, it's all over. You know, we're slicing through this 1900. So you can use it as a target, but I really don't think it's going to be a trade area. I think the area to watch is going to be the 97.75 below. And then below 97.75, target the 93.25 range. Was it range low? Pretty sure it was range low from Friday, and then below Friday a move back into our main target below, which is going to be the former microcomposite VPOC here at 19. Now usually I would say that this is a target, but this is also going to be a trade area, and the reason why, it's our main magnet below, and it's the MC VPOC, the last accepted price where we broke out. So in this case, where I like to enter in areas of price rejection, this is a time I would look for a bounce off of the 1890 as the buyers come in, you know, that accepted value there before. So just a little bit, it's a little bit shift in theology in terms of the trading methodology. Because usually we would not be looking to get into a trade at 1890. In this circumstance, we will. Now, if we don't find buyers coming in here, then you got to be targeting this 85 area. You know, this 85 area was the last price accepted before the breakout. And it's also the VPOC, I believe, from last Thursday, the naked VPOC. And then we still have range to come down here within our daily ATR, 20-day ATR range. And we've got this naked close down here at 81. Below 81, look for some responsive buying down here at 77. And anything below 70, then I think we're going to see a bigger move down. And again, there's not much down here below the 70. We could come all the way down to that next key support level at 1848.75. Again, I'm not expecting this, but we're setting these levels up so that we understand what the possibilities are. And it's clearly within our week range to come down into the 65 area. It's within our day range to come down into the 81, 82 area, even though we've made a pretty big move so far overnight. So, again, the main hypothesis is going to center around the 09 level, the 0850 key line in the sand. Below that, looking for a move down into the lower 1900s. And if 97 doesn't hold, then a move back to the 90 and possibly even down into the 85. Below the ATR, we could set up for a trend day down, but I'm not expecting that. If we hold the 09 or test the 09 or even come down and pop around from the see responsive buyers coming in from the 575 area and then get back up and we get into value or into range, then I'd be looking for a test of the value area low. Anything inside the value area, continuation move up into 25, and anything above 25, continuation up into taking out the gap and a test of the upper distribution from yesterday. So taking a look at the Keltner, you can see that our lower Keltner line, we are setting up for a zippered measured move. So let's just take a look at that quickly. I know I'm trying to cover a lot right now, but I was running late. So I would measure it from here. You could measure it from here, but I'm going to measure it from here. This is the latest. So the measured move takes us down into 775 with extension into that 575 range. No, and the first target, the 38, is right there at the 9.25. So if we break this the zipper here below 11, I'd be looking for the continuation down to test that and take out the overnight low, or possibly we still have 15 minutes, put in a new overnight low. Keltner center line is up at 1450. Above that, look for that 16 VPOC, and the test of the upper Keltner is going to take us up into that 1920, likely be 1922 by the time we get there, and the test of the value area low from yesterday. Quick look at gold. Gold continues to hold value above the 1116, so we broke out of this value down here that was centered around the 1102. We accepted that price just before the breakout, and then we broke out. Now they're trying to hold value at 16, stay above the range that we broke out of. Our value area low right now for this microcomposite is at 1190, which is this CLVN that we've been watching and using as our key line in gold. We're coming up, we've broken out of the value above at 1121, and we're coming up into the 1129 area. This takes us back outside of this balance area, puts us into price discovery. Anything above this, I'm looking for a break of the 1130. You can get in and get funded by the 1130.20, and then a move up. The next step up is going to be up here into 1137. If we reject this area, look for them to rotate back towards the 1126 area, possibly even the 1121. Anything below 1121, expect to move back down into balance into the 1116. If we get below the 1111, it's a trip back down here to the prior microcomposite VPOC. But remember, my main hypothesis is a slow grind up, and grinds do not go in one direction. They go in one step up, two steps back, one step up. But the main hypothesis is a slow grind up in gold up into the 1250 area. That is the composite VPOC going all the way back to 2008. The next big target above us is the 1166 area. And I'm expecting that we should be in this 1166 area if we get a pop into the 2000s. If we drop into the 1800s again, I'm expecting gold to get a pop sometime in the next 30, 60 days up into the 1165s. Then I think we'll fail from there and do some back testing. But the idea is that hypothesis does not change until we get below the 1160 area. Below 1160 area, then it's all over for gold. Gold's got no support below it, and we're likely to come all the way down into this 1000 area. But right now, it's doing what it's supposed to do and continuing its price discovery up. As I mentioned, we started putting out the homework sheet. The QLTP is back. It's still in beta because Howard and I, we took, we had about a year break on doing it. We've kept the entry. We still have, data going all the way back to 01. So please, go through the QLTP, and if you see any mistakes in values, let us know. We just want to make sure that the information is accurate before we put it out. Basically, this one sheet is derived from a lot of work that goes into these homework sheets, and this is a guide, ladder above the previous day close and ladder below the previous day close with all the key confluence areas. Once we know all the data is correct, then we'll go into the QLTP2, and I'll start putting in my my daily hypothesis and my targets and trade areas on the sheet rather than just on the chart and in the session. That way you can print it out and have it. So that is coming. You just have to get back into this groove and make sure all the data is accurate. That's going to complete our pre-market session. Also, I said that I was going to bring crude in. I am going to bring crude in on a daily analysis as I'll add it to the ES and gold. Unfortunately, I've had this problem with the with this new account that we opened up, and that's distracted me. I wanted to start setting up my charts, and until I got that done, I can't set up my charts, but I will be setting up charts. Of course, Marvin does keep charts on crude, so if you've got questions during the course of the day, he can pop in charts and we can take a look at that analysis. Anyway, that's going to complete our pre-market analysis and trade plan setup for Tuesday, February the 2nd. As always, trade well, trade safe, and we will catch you on the flip side.